Order filled.
What's good, everyone? Welcome back to another YouTube video. It's been about 2 months since my last post, but we're back again for another trade breakdown for the trade I had taken today, catching right about 250 points trading NQ. And as always, proof of the trade, live account, trade of the live account. It says I've taken a loss. That was obviously the break even I had back here, but had placed it break even due to the bid and ask. I got stopped out by a single tick, so counts as a loss on my trade of it, but really doesn't matter. Point is that we had re-entered right away, ended up banking just about 250 points, and just had just under a 5-figure day, but nonetheless still blessed. Now, when it comes to my schedule on YouTube, this is going to be one video that I'm going to make, and then a week from now I'm going to be going to Italy, Switzerland, and I'm going to do my absolute best to get a bunch of clips, recordings, actually talking to the camera, some IRL content, so that I can actually show you guys what I do outside of trading as well. But regardless, try to get some trades in during that time as well. Make it a mix of trading, traveling, mountaineering, all that. So hope you guys enjoy for what's coming, and then of course hope you guys enjoy the trade recording, as we'll explain everything when it comes to what I use in Confluences, my analysis behind the trade, my pre-market analysis, all that right after I'm done showing the trade recording. So catch you guys all right after that.
Fuck.
Alright, so hopefully you guys enjoyed that trade recording. Now we can get into my pre-market analysis before we get into the charts. So my pre-market analysis, I post this every single morning for my private group. If you're interested in that, interested in mentoring, the link's going to be in my bio. But as you can see, I'd said that overnight had failed to trade into the higher POIs that I would have expected price to trade into for our weekly smart money reversal. Essentially what I'm getting at there, and it's tied into what I explained to them in our weekly review last night, was that going into this week, we were overall expecting lower prices, or at least would want to expect lower prices based off how our weekly Power 3 develops. So I was hoping last night would accumulate, manipulate, run out the previous day high, run out the internal high inside of the daily imbalance, and then seek lower from there. But we in fact did the opposite. We had had short-term accumulation, manipulation, distribution, but failed to trade into the PYs above. So instead, this to me, especially with the low resistance liquidity that we had built up overnight, that was my manipulation to then support longs. So then I said that due to that, I'm going to assume that New York Open will return. When I say return, I'm referencing the PYs above. With that said, as of now, I'm going to still have the New York fill below us. Or, my bad, I said, as of now, we still have the New York fill below us, which may be a short-term objective. If you saw the trade recording, you guys know that I had annotated this as a potential draw on liquidity to reverse from. But I'd said that we'll see how price reacts at low of the day and going into New York Open. So this was about, let's see here, about 4 minutes prior to New York Open. I said that I would see how price would react to low of the day because I was assuming we would see a resweep of low of the day, and then based off how we react there, whether we keep on displacing lower or reverse, would then dictate my actions for the day. So from there on out, we'll now get into New York Open. So we'll actually take a step back and quickly reference exactly why we want to see lower prices on a higher time frame. So when it comes to our overall development, as we were previously talking about in our other videos, the other trade breakdowns, was that our current yearly power 3 open, accumulate, manipulate, distribute, is actively bullish. But in order to continue being bullish, we have to, of course, rebalance the range, retrace, and of course, we're doing that. We're doing that in the sense of our quarterly power 3, because again, time frame alignment, yearly, quarterly, monthly, weekly, daily, and then the 4 hour 30-minute. Current quarterly power 3 since the beginning of July has since then been manipulating lower to rebalance the range below. This thing right here is the yearly low to yearly high. This is EQ. And as we can see last week, had entry liquidity right above EQ. So logically speaking, going into this new week, we would have some sort of manipulation, and the obvious POI that we have is the internal high in line with the daily imbalance. And so that is what I was currently looking at going into New York Open, and I wanted to see something like this, or not even New York Open, but I wanted to see this going into Asia session. But of course, since we didn't do that during Asia, we had then shifted into New York session. So that was the overall idea going into our higher time frame analysis in reference to a yearly, quarterly, monthly power 3, and of course, again, new monthly power 3, since it is now the beginning of August. So August is putting it in short-term manipulation higher to then go back lower. At least that's how I'm seeing it as of now. Things can obviously change as price continues to develop, but that is what I'm thinking as of now. All right, so now going into New York Open, we'll quickly go over price action. So 9:30 opens up, and instead of, because of course, if we're expecting price to come down into the New York fill, it's likely that 9:30 to 10 a.m. is going to be our bearish delivery, a bearish move, classic 30-minute open, high-low close. And then 10 a.m. potentially reverses, or instead we get 9:30 open. And what do? We don't manipulate higher. We don't run out any sort of high, any sort of liquidity. We instead immediately manipulate lower. Instead, we run out sell side. Instead of running out buy side and going lower, we do the opposite. We run out sell side, which is classic open, low, high close, bullish, power 3 development. So 9:30 it opens, manipulated lower, holding no lower time frame SMT, but we did have time frame SMT. We can see very obviously that YM is very, very out of sync, doing almost the exact opposite of NQ and ES. ES pretty much just accumulating, NQ manipulating, and YM just expanding higher. So we obviously have SMT. I sometimes get questions like this where when YM is super detached, super decoupled, should we still be using that as SMT? And the answer to that is yes, because when it is decoupled, that is a market giving us opportunity. So it's still valid. But the thing is that we did not have any sort of lower time frame SMT to validate a trade. There's no clear 1 minute CRSD because here, even if you had entered there, your stop loss, assuming we close the rate where the CRSD would occur, you place your stop loss at the low, that's over 100 points. So no interest in taking something like that, even if there was a lower time frame SMT. Instead, price displaces. So price displaces, since there is no lower time frame SMT, I'm not entirely looking at any sort of 1 minute cracking collation, but I was taking note of EQ of this recent expansion range, which, just for reference, I'll turn on the levels just so you can see it. EQ, OTE, that's what we should be having when you're looking at ranges. Price retraced into EQ that range. You can see right there. EQ the range. Take a step back. 5 minute CISD. Clean 15-minute soup. As we can see right here. Clean soup on the 50-minute. Clean reversal. Now we have a 50-minute and 5-minute CISD. So our quote-unquote immediate higher time frame structure has now flipped bullish. Above us, ton of low resistance liquidity with the pre-stay high unmitigated, with the external internal high inside of the daily imbalance also remains. So we have so much buy side liquidity, and in terms of the simplicity of how ICT explains it, we have low resistance liquidity above us and high resistance liquidity below us. So logically speaking, longs are going to be far more probable than shorts. So then NQ 940 retraces into EQ, retraces into this 5-minute order block, as we can see right here. So while doing so, boom, boom, then took the next 15-second CRSD, as we can see right here. And had executed that. Stop loss was about 40 points, 40.75. TP, of course, was was drawing to the internal high, but I TP'd at the obvious drawn liquidity, which was the previous day high. So we had the high low resistance liquidity, which was the high of the day, and then above that we had the previous day high. Initial execution was based off that 15-second CRSD, and you guys saw that I cut break even on that retracement. That was a wrong. It's not up to my standard when it comes to my trading. It was a wrong decision. My plan was to go break even as soon as we ran out this high right here, which I made a emotional decision to cut early. And I knew that, I recognized that, I knew I had made the wrong decision to cut break even, because immediately after I got break evens, we immediately started to expand higher once more. So I literally just entered off that reaction from me getting break even, because really we just retested the 15-second CISD, which now acts as a order block. And so I simply just entered off that. Stop loss at this low now, because I'm assuming that if we're truly going to be bullish and that we're not going to go any lower, this low, now that mitigated the 15-second CISD order block, is now protected, and we should assume price is going to immediately expand to pre-stay high. So executed that. 1 to 8 risk to reward. Initial entry was about a 1 to 6, 1 to 6-ish risk reward, whereas my second entry was a 1 to 8. Now, of course, when I have partialed at the high, that kind of makes my risk reward go down a little bit, but overall it's like 1 to 7.3, and a 1 to 8.2 pretty much just comes out to an average of a 1 to 8 risk reward. And that was it. I mean, again, all you're doing is not selling at any sort of random high, because again, you're targeting the clear time-based draw, which is your pre-stay high. Any of the lows, or my bad, any of the highs in between, all the way down here, it's just noise. It's just low resistance liquidity. Logically speaking, we're not going to just go and randomly run out one of these random highs in the middle of the low resistance liquidity and reverse. That's just not logical, because we still would have more low resistance liquidity. No, and if you're expecting a weekly SMR, you know it's going to be something like what forms down here at the low of the day. A clean reversal, a protected low, a high, or yeah, a high resistance liquidity run. So not run, but it's just high resistance liquidity. It's hard to break through. So a clean reversal like this, you're expecting that to form a high of the week, which we are probably setting up for potentially going into PM session, or if not that, going into tomorrow, going into Asia session. But that is it for today. Anyways, I'll catch you guys all in my next video. Hopefully you enjoyed. Any questions, comments, concerns, just leave those in the comment section below.